Ladies and gentlemen, markets were in a rocky place to start off the trading day until Donald Trump dropped some huge news that we're actually going to make a deal with China, that a deal will get done, and not just China, but the European Union. Now, we also are expecting a deal with Japan could be announced pretty soon, but Donald Trump says, wait, we're not in a rush to announce these deals. This is giving the markets just enough to get optimistic. But is the stock market crash actually over with? Is this the time to get more invested into markets or still play a little defense? I will break that down throughout this video. And one of those potential trade deals could be with Italy. Italy's economy minister says that tax policy, including domestic digital levies, is a matter to be discussed with the US at a bilateral, not EU level. And Italy's economy minister says that he plans to meet US Treasury Secretary Bessent at the G20 summit on Tuesday. IMF's managing director, Georgieva, says we're likely going to see more bilateral agreements. He also says we see a global slowdown and need to reduce uncertainty so businesses can plan. He was also asked about rising tensions between the US and China and says, quote, both parties have grievances. He also says it's good to see elements of US pro-growth agendas moving forward. And he says a strong US economy is a stabilizer for the rest of the world. He also says that real economies are functioning and labor markets are quite strong. Also helping to stabilize markets at least a little bit today was TSMC earnings that came out this morning. This headline here says TSMC forecast lifts gloomy mood in chip stocks and tariff worries linger. Taiwan Semiconductor Manufacturing Company, whose customers include Apple and Nvidia, reported better than expected quarterly profit on Thursday and maintained its full-year outlooks on both revenue and capital spending. That was a fear that a lot of us had, that you were going to see companies really not give guidance and just leave it up to kind of the markets to interpret what, sales and profits could look like. But TSMC coming out and giving guidance shows confidence that the semiconductor boom is still alive and well. This article here says Taiwan Semiconductor Manufacturing Company's results reported earlier this morning boosted shares of the Taiwanese chipmaker. CFO Wendell Wong said that demand for its products outside of China is, quote, still really strong. And as we get deeper into earnings season, this will continue to be a big catalyst because at the end of the day, stocks move on for two reasons. They move on emotions in the short term as people try to figure out, what different news headlines mean. But at the end of the day, they move on earnings. And if earnings come in good and we get enough guidance to kind of paint a picture of what this year could look like in the best or worst case scenarios even, that's a positive. The IMF's managing director says U.S. effective tariff rates have jumped to levels last seen several lifetimes ago. They're referencing the Smoot-Hawley Act, but that was in 1930, and it was not even close to the tariff rates that we're seeing today. Like, if tariffs go into effect how they're written, you will see a global depression, more or less. If not a depression in the US, a severe recession, one that you have never seen before. So is that going to happen? Is Trump going to let that happen? Probably not, because in that kind of environment, you just screw everyone. It doesn't really help your onshoring, goals. Okay, so I'm optimistic trade deals get done. And when we start to get trade deals, markets are going to love that. And effectively, markets are going to bottom and the extent of the selling is going to be over when the US and China start to negotiate. Not even when a deal gets done, but when they start to negotiate is when you're going to see markets really recover. And I think that's coming, but it's going to take some time. And the IMF says they will release an updated outlook next week that includes notable markdowns, but not recession. ECB President Lagarde says EU countermeasures not included in current baseline. So the ECB, essentially Jerome Powell of the European Union, is saying that they don't really think there's going to be retaliation from Europe. Trump and Melania, this is the president of Italy, will discuss tariffs, but visit is not focused on it, according to a U.S. official. They will be discussing defense, energy, and shipping. China's President Xi says trade wars undermine multilateral trading system and disrupt global economic order. China's vice premier said he met with NVIDIA's Jensen Huang. That's interesting. This was one of the biggest headlines of the day today. A senior U.S. official on trade says the U.S. is open, available, and ready to make deals. I would argue as soon as this weekend, you could see multiple deals getting announced, which could obviously be good for next week's trading. Keep in mind, though, tomorrow markets are not open for Good Friday. Mexico's Scheinbaum says the talk with Trump was productive. We will keep dialogue. Chinese Vice Premier He Lefeng welcomes U.S. companies, including NVIDIA, to invest in the Chinese market. That's a good sign for companies that do business in China. You're talking Tesla, Nike, Starbucks, Apple. The last thing you want is the Chinese consumer kind of revolting against U.S. products, because although we don't import a ton of things to China, some companies do have a large presence in China. And ECB President Lagarde says downside risks to economic growth have increased. Fed Williams says today the longer run federal funds rate likely around 3%. And he says the neutral rate is still likely low. Fed Williams says growth this year is likely significantly slower and unemployment will rise. He says that he won't make a prediction about recessions, and he says tariffs will definitely impact inflation this year, but it's unclear how long it will persist. He says it is time to collect data and understand what's going on. He says the monetary policy is well positioned and doesn't need to change rates anytime soon, which that's kind of the same old that we've heard from the Fed over the last couple of weeks. I mean, Jerome Powell basically said the same exact thing yesterday that all other Fed officials have been saying. Just yesterday, when you get thousands and thousands of traders paying attention to every word Powell says, and he says the same old, it hits a little different. It hits the news wires a little different. It's a little bit more affirmative to the Fed's overall stance, and that's what caused yesterday to be an over 2% down day for markets, even though Powell did not say anything new. Nothing Powell said was shocking information, but yet markets took it as, oh crap, we have a problem. On that note, U.S. Treasury Secretary Bessent has cautioned White House officials on attempts to fire Fed Powell. This comes after Donald Trump on Truth Social this morning says, quote, the ECB is expected to cut interest rates for the 7th time, and yet too late. Jerome Powell of the Fed, who is always too late and wrong, yesterday issued a report which was another and typical complete mess. Oil prices are down, groceries, even eggs are down, and the USA is getting rich on tariffs. Too late, should have lowered interest rates, like the ECB long ago. But he should certainly lower them now. Powell's termination cannot come fast enough. Look at that. Donald Trump says we will have a deal with China. That's the first time we've kind of heard a positive statement from Trump in regards to a trade deal with China. And it seems like Wall Street likes that news today. Trump says there is no rush to announce trade deals, but he says we will end up with a substantial number for baselines. Trump says we are moving along on trade very well, and that everybody is on his priority list. And Trump says we will make a good deal with China. And here's a headline that is causing markets to move higher. Trump says he's very confident on a trade deal with the European Union. The CNN Fear and Greed Index today is coming in at 19, which is in extreme fear. All of your categories are in extreme fear besides market volatility, that is neutral, and junk bond demand, which is in fear. Safe haven demand, put in call options, stock price strength, stock price breadth, and market momentum are all in extreme fear. We did get a new AI investor sentiment survey today that really didn't move too much. Bullish investors actually fell from last week's 28.5% down to 25.4%. Neutral investors rose from 12.5% to 17.7%, and bearish investors fell a little bit from 58.9% to 56.9%. So not a whole lot of movement here as far as sentiment is concerned. Now, when we try to think about, is the selling over with? Have we bottomed? Okay, there's a couple things you guys need to know. Number one, stocks move in the short term based on emotions, based on pricing of expectations. In this environment, that's changing by the minute, okay? That's why it's been so volatile in the short term. Long term, stocks go up or down based on earnings and based on multiples, okay? Now, it's kind of interesting because this whole tariff situation can impact earnings and multiples, push us into a recession or whatnot. But here's the hard part. How serious is Trump? Does he actually want to make deals, or does he want to screw the U.S. economy? I don't think Trump wants to cause a severe recession, in which the tariffs in their current form would absolutely do. Okay, I don't think that's what he wants. Okay, but it's hard to know, and that has to be in your baseline assumption forecast somewhere. Now, I'll tell you right now, this market bottoms and the selling is over with the second China comes to the negotiations table. At that point, markets are going to say, hey, we're going to have a deal, and, well, we're going to price that in ahead of time. Okay? I don't know when that's going to happen is the difficult part. But at some point, it will happen. And that is the ultimate bottom moment. Now, back to the number one first thing that moves stocks in the near term. It is emotions. It is expectations. Now, we went from Trump saying there's no negotiations on these tariffs. Basically, you're screwed, in other words. That's why the S&P fell almost 22%. To, no, this was the whole idea. We're going to make deals, blah, 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 to where we are now. I think it's hard at this point to get more fear than we had then. Meaning, if we don't hit peak fear again, it's hard to see substantial downside from here. Now, the reality is, if these Trump tariffs go into effect, the S&P is going to drop another 40 or 50% from here. That's the reality. Okay. What are the odds of that? I think they are low at this point for sure. So from that perspective, I think it's unlikely that we don't have any trade deals, that China ultimately does not come to the negotiations table. Like, you would have to see China, these tariffs, like, stay in effect, and the rest of the world, a lot of countries, not come to a deal to get peak fear. I don't think that is likely at this point, and that is why I'm a little bit more optimistic on markets right now. And I do see consumers that are continuing to spend. Unless these tariffs go into effect, companies may not need to fire people, okay? As these tariffs eat away at margins, companies are going to have to either fire people or use something like AI, just become more efficient, to raise margins internally to offset that. Because companies are not just going to let their earnings get destroyed and, you know, people lose a lot of money in the stocks, right? Let's be honest. They would rather fire 50% of their workforce and say, screw those people, than have their stock go down 80%, okay? That's just the fact of the matter. That's the reality. We live in a capitalistic world, okay? But as long as there's no need to fire people on a massive scale, it looks like, as banks have said, consumers will continue to spend money. Now, we are gearing up for earnings season. And we've already gotten some earnings today. Like I said, TSMC was kind of a relief on markets that they didn't have anything bad to say. You also have Netflix today and after hours. Netflix is one of those companies that can move the broader markets. They can move other Mag 7 names, but don't always have to. Okay. It's like sometimes it does, sometimes it doesn't. Now, right now, with tariffs and growth being a big thing people are concerned about, I don't think Netflix really represents either one of those things. So I don't know how much of a sympathy reaction we're going to get from Netflix earnings coming today in after hours. So generally speaking, I think it's time you want to be bullish. You want to have exposure in markets. Maybe not be bullish, but you want to have exposure. But also remember, there is a chance that there is no deals done, that this 90 days comes up and goes, and China doesn't negotiate, and we're back to square one. If that happens, then markets could fall a lot further from here. And that is a potential outcome that you have to be prepared for. So no, I don't think it's time to be all in on margin. But if there is opportunities out there, I think you need to take advantage of them, in my personal opinion. Now, I'm not a financial advisor. I'm not a financial planner. Of course, you could lose all of your money if you listen to a random guy on YouTube, or you listen to anyone for that matter. You should always come to your own conclusions. These are my conclusions for right now. I don't want to miss the day when the U.S. and China start to negotiate. That is likely the last day in this correction or bear market, whatever you want to call it. So let me know your thoughts again down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.